There's a housing market, but there's also a lending market. And I think what we're going through
Yes.
right now is a tectonic shift in the lending market. I think it is very possible, if not probable, that rates are lower by the end of the year than they are today, but getting a loan is harder at the end of the year than it is today. And people just don't understand that. So I think the lending market is changing right in front of our eyes. What do you think?
100%. And I remember us having this discussion about this time, late 2021, when we started to see some of these things happening. And we said, listen, this inflation could lead up to the Fed hiking rates, put us into a recession. And when that happens, credit markets will squeeze up. It's the hardest part about being a real estate investor now. And if we get recessionary and it goes deep or it goes long, lenders are just going to get tighter and tighter. And I'm actively investing like you are, right? So
Yeah,
we're actively looking at deals. And I have
every day.
deals right now that the lending is changing on a dime with great quality, credit. My score is usually 830 to 850, somewhere in there.
Oh, yeah.
Great assets, great income, and they're still going. Sorry, we have to change what we've offered you because you're not locked in yet. Rates are going up. We're lowering the LTV that we're giving you.
Mhm.
It's not you, it's me, right?
Yeah.
But lenders are nervous, and when they get nervous because there's unknown and there's still volatility, they don't know what to expect. And so their credit guidelines always get much tighter during a recession or any kind of financial crisis. So we're going through that. It's easy to see that it's going to happen. Nobody should be surprised by it. But I don't think the volatility and that lending tightening is over anytime soon. It usually takes, Michael, because I've studied this, usually takes about 6 months after the end of a recession or financial crisis before lenders say, okay, I think the economy is growing again.
Woo.
We can start to loosen up again. So
Yeah.
we just need to be prepared as investors that the lending piece is going to be the hardest piece. If you can buy deals on creative financing, seller financing, private money, and 30-year fixed mortgages, if you can get a DSCR loan, are great. But just don't be surprised. You always have to have plan B and plan C for your lending because until the day you close, that loan is not closed. And I've actually had a loan pulled on the day of closing twice.
Yeah.
So I've seen it in real time. So this is a sign that credit is nervous. It's going to continue to be nervous. And we just need to get through this cycle and keep doing deals and have a lot of options.
Absolutely, folks. So again, remember one of the things you should be doing, you follow one rental at a time, not only is looking at your buy box daily, but have those conversations with lenders. And I would caution or suggest you have conversation with multiple lenders because deals can get pulled last minute, LTVs can change, all of this great stuff. Anna, where can people find you?
Great. You can find me on this show every Wednesday and on my playlist on your channel. You can find me on social media at Anna Kelly, REI Mom. And if you are an accredited investor looking for passive investments, you can follow me at greaterpurposecapital.com.